Welcome back, YouTube investors. Today, we're diving deep into the world of the beverage industry, analyzing four of the most recognized names in the sector: Celsius Holdings Incorporated, the Coca-Cola Company, Monster Beverage Corporation, and PepsiCo Incorporated. These companies are giants in their field, each dominating their respective segments within the beverage industry. But the big question remains: are these companies solid investments at their current valuations? To find out, we'll explore their financial metrics, profitability, dividend sustainability, and overall market performance. One of the key ways to assess a company's valuation is through the price-to-earnings ratio. This metric helps investors determine how much they are paying for each dollar of earnings. A lower P/E ratio can indicate an undervalued stock, while a higher P/E ratio suggests a premium valuation due to growth expectations. Celsius is currently trading at a P/E ratio of 39.93, significantly lower than its 5-year average of 82.07, suggesting that it may be trading at a discount relative to its historical valuation. Meanwhile, its forward P/E ratio of 29.80 indicates that investors expect strong earnings growth in the coming years. Coca-Cola has a P/E ratio of 24.97, slightly above its 5-year average of 24.19, suggesting the stock is fairly valued. Its forward P/E of 22.51 reinforces this view, showing steady expectations for future earnings. Monster Beverage trades at a P/E ratio of 36.44, slightly above its 5-year average of 34.64, indicating the market still prices in growth expectations. Its forward P/E of 28.86 suggests a more reasonable valuation looking forward. PepsiCo stands out with a P/E ratio of 16.61, notably below its 5-year average of 27.76, suggesting that it might be undervalued at current levels. Its forward P/E of 15.78 reinforces this attractive valuation. Beyond just P/E, the price-to-earnings growth ratio factors in expected earnings growth. A lower ratio often signals a stock that is fairly priced relative to its future growth. Celsius P/G ratio stands at 0.87, suggesting a strong growth profile at a reasonable valuation. Monster Beverages P/G is 3.07, Coca-Cola's is 4.11, and PepsiCo's is 5.32, indicating that PepsiCo and Coca-Cola are trading at higher valuations relative to their growth rates, while Monster sits in between. Insider ownership is another key indicator of management's confidence in the company's future. Celsius leads the group with an impressive 38.38% insider ownership, followed by Monster Beverage at 28.98%. Meanwhile, Coca-Cola has 0.78% and PepsiCo 0.35%, typical of larger, more established corporations. When it comes to profitability, return on assets, return on invested capital, and return on equity are critical measures. PepsiCo leads in return on equity with an outstanding 50.06%, followed closely by Coca-Cola at 41.86%, Monster Beverage at 21.27%, and Celsius at 12.54%. In terms of return on assets, Monster Beverage shines with 17.34%, followed by Coca-Cola at 10.72%, PepsiCo at 9.29%, and Celsius at 8.78%. For return on invested capital, Monster Beverage again leads at 25.21%, followed by PepsiCo at 16.52%, Coca-Cola at 15.41%, and Celsius at 10.13%. Looking at share repurchases and dilution, Celsius has increased its share count at a 9.06% compound annual growth rate over the last decade, reflecting equity financing for its explosive growth. Meanwhile, Coca-Cola's share count has remained flat, while Monster Beverage and PepsiCo have reduced their shares outstanding at -1.47% and -0.77% compound annual growth rate, respectively, a positive sign for shareholders. Earnings per share is another crucial measure of financial performance. PepsiCo leads with an EPS of $8.03, followed by Coca-Cola at $2.88, Monster Beverage at $1.61, and Celsius at 92 cents. However, when we look at the expected EPS growth over the next 5 years, Celsius dominates with an expected growth rate of 46.12%, compared to Monster's 11.88%, Coca-Cola's 6.07%, and PepsiCo's 3.12%. In terms of historical EPS growth, Celsius again shines with a massive 75% growth, Monster Beverage at 12.4%, PepsiCo at 5.8%, and Coca-Cola at 3.71%. While looking at free cash flow per share, which plays a major role in evaluating financial strength, Celsius boasts the highest growth at 115%, followed by Monster Beverage, 10.75%, PepsiCo, 4%, and Coca-Cola, 2.53%. For dividend-focused investors, PepsiCo offers the highest yield among the four companies, with a 4.27% dividend yield and quarterly payments of $1.42 and 7.3% compound annual growth since 2014. However, during the recent years its free cash flow payout ratio is over 100%, so in the near future a low dividend increase is expected at least to retain the dividend king category. Coca-Cola offers a lower yield of 2.84%, but also has a dividend growth rate of 4.78% over the last decade, at least over inflation rate. Celsius, on the other hand, currently does not pay a dividend, but with a free cash flow payout ratio of around 70% below the other two companies, it could potentially introduce a 1.77% dividend yield and an impressive 15% potential annual growth. Additionally, Monster also doesn't pay a dividend. A hypothetical payout ratio based on FCF yield would be a modest 2% dividend yield but with potential 10% dividend growth for the next 5 years. Operating and profit margins are key indicators of efficiency. Monster Beverage stands out with an operating margin of 25.76% and a profit margin of 20.14%. Coca-Cola maintains strong margins of 21.25% operating and 22.73% profit. PepsiCo has margins of 15.44% operating and 10.24% profit, while Celsius holds 11.49% operating and 7.76% profit margins. In terms of revenue and earnings growth over the last 8 years, Celsius and Monster Beverage have demonstrated very strong performances, reflected in their stock prices outperforming the beverage sector ETF. Coca-Cola also shows a positive business evolution and has outperformed, while PepsiCo has positive business evolution but underperformed compared to the ETF. Debt levels are critical when assessing financial stability. Celsius maintains the lowest debt/EBITDA ratio at 0.12, followed by Monster Beverage at 0.19, PepsiCo at 2.71, and Coca-Cola at 2.81. In terms of debt/free cash flow, Celsius again leads at 0.09, Monster at 0.22, Coca-Cola at 4.41, and PepsiCo at 6.19. Is to be explained that I normalized the Coca-Cola free cash flow since this year their working capital was around $5 billion above the natural values. Looking at market performance over the past 52 weeks, Coca-Cola delivered a 16.47% price return, followed by Monster Beverage at 10.39%. Meanwhile, PepsiCo declined -24.51%, and Celsius dropped sharply by -48.72%. When looking at market capitalization, we can see 3 consolidated companies and Celsius that is a strong contender for the next decade with a market capitalization below $10 billion. Now, let's talk about the crystal ball moment, analyst expectations and fair values. Analysts have set varying price targets for these companies over the next 12 months. Celsius has a price target of $41.36, representing an upside of 12.59% from its current price of $36.74. My fair value estimates Celsius at $39.74, suggesting it's close to fairly valued. Coca-Cola's price target is $75.68, representing an upside of 5.24% from its current price of $71.91. My fair value for Coca-Cola is $60.92, indicating it may be slightly overvalued. Monster Beverage's price target is $58.06, implying a downside of -1.04% from its current price of $58.67. My fair value for Monster is $47.50, suggesting it could be overvalued. PepsiCo's price target is $155.24, representing an upside of 16.39% from its current price of $133.38. My fair value for PepsiCo is $135.57, suggesting it is fairly valued at current levels. Each of these companies has distinct strengths and weaknesses. Investors should weigh these factors carefully when considering an investment in the beverage sector. Let me know your thoughts in the comments, and don't forget to like, subscribe, and hit the notification bell for more financial insights. Until next time, happy investing!